Hello, this is the presentation of the study under the title Price Linkages in Commodities Future Markets, a Contemporaneous and Langdar Squared Decomposed Connectedness Approach. Introduction. Price in the relationship with the commodities future markets are very important. The study investigates and examines the price relationships among the commodities of agricultural, livestock, energy, industrial metals, and precious metals. It has been observed that an increase in commodities prices might lead to speculation within the future markets. As a result, we usually observe speculation, hedging, and of course, portfolio diversifications from the participants in these markets, namely traders and investors. Methodology. The present study uses a contemporaneous and Langdar square decomposed connectedness approach. This approach provides unbiased estimation results and is computationally more efficient relative to its alternatives. The approach also distinguishes between the contemporaneous and lagged price spillovers among commodities future markets, and this is what exactly this study is going to do. The relevant literature. There are two relevant studies. The first one is by Bali, Dang, and Gabauer under the title Contemporaneous and Langdar Square Decomposed Connectedness Approach, New Evidence from the Energy Future Markets, and it was published in 2023. As the title says, it investigates the price in the relationships, contemporaneous and lagged, among the energy future markets. The second study is by Yang, Shao, and Zhu, under the title Contemporaneous and Lagged Spillovers Between Agriculture, Crude Oil, Carbon Emission Allowance, and Climate Change. It was published also very recent in 2025, and it examines for contemporaneous and lagged spillovers between now different as a commodities markets. The data has daily observations from the S&P GSCI price indexes, of course for the commodities of agricultural, livestock, energy, industrial metals, and precious metals. The time period is between January 2015 and January 2024, and all estimations have been conducted using the R-package connectedness approach. Figure 1 presents the evolution of the logarithm of the future prices. As we can observe, the evolution of the energy of the commodity of energy has a significant drop, a decrease in the prices in the beginning or around the beginning of 2020, which is the time period that marks the start of the COVID-19 pandemic, and if we can recall, energy prices had significantly decreased that period. Now we're going to proceed with the empirical results. Table 5 presents the contemporaneous connectedness measures for all 5 futures, and it's of course the averages. From a figure from the table 5, we can observe that energy and industrial metals have the strongest connectedness, or the strongest bond, if I can say that in more in a simple way, and livestock and agriculture the weakest. Table 6 presents the lagged connectedness measures. I'm going to take here 1 minute to remind you that this is exactly what this study examines: contemporaneous and lagged connectedness measures between these 5 different commodities. Again, the same results seem to be true as in the contemporaneous table. Figure 2 presents a total connectedness index decomposed into contemporaneous and lagged measures, as we can see here, and let me be a little bit more clear. The overall is the black line, the green is the lagged, and the red color is the contemporaneous. We can see how significant the contemporaneous measures are from this figure. And now we can proceed with the conclusions. The conclusions for the present study is that for the total sample, the empirical results suggest that overall connectedness is stronger for energy and industrial metals. This is something that was pointed out in our presentation. Connectedness for livestock and agricultural products is the weakest. Contemporaneous connectedness is higher than lagged connectedness in all categories. Contemporaneous connectedness also is stronger during the COVID-19 pandemic as well as the period following the beginning of the conflict between Russia and Ukraine. This also can be observed in the figure that we presented in this presentation. Agricultural and energy commodities are net transmitters of shock during the COVID-19 period. And lastly, livestock and industrial metals are net receivers of shocks as a result of the Russia-Ukrainian war. Thank you for your attendance.